All right, so welcome back for another deep dive with us. Today we're looking at, well, it's all over the news right now, the Egyptian pound. It just took a pretty big hit against the US dollar.
Yeah, it's a historic low, actually.
Oh, really?
Yeah.
Wow, so we've got a bunch of articles here, both in English and in Arabic, and we're gonna kind of go through those and try to figure out what's going on, what this means. So right off the bat, today, December 5th, 2024, the Egyptian pound hit 50 to 1 against the US dollar for the very first time, like ever.
Yeah.
Which 50.03 to 1 to be exact at some banks. So that's a big development. So I guess the question is, why is this happening?
Well, the thing is, I mean, it's important to remember that this actually isn't the first time that the pound has dropped this year.
Right.
It also fell 9 months ago by about 40%.
Oh, wow.
And this drop is especially notable because it comes at a time when the International Monetary Fund, or IMF, is heavily involved in Egypt's economy. They've provided an $8 billion loan package as part of this kind of larger effort to stabilize the global economy.
Right. Yeah, it's a global thing for sure. But why is the IMF, I guess I'm curious, why are they so focused on the Egyptian pound's exchange rate?
Well, so the IMF, they're really big on these flexible exchange rates. They think that allowing a currency's value to fluctuate freely, it helps a country's economy absorb global shocks better.
Ah, I see. Okay.
Kind of like, like a pressure valve, I guess.
Yeah.
You don't want things to explode.
Right.
And a fixed exchange rate can seem stable in the short term. Then, we've seen what can happen in a place like Argentina where those fixed rates created massive problems down the line.
Oh, okay.
Yeah, the IMF really wants to avoid that kind of scenario.
Yeah. So they're trying to give the Egyptian economy a little bit of breathing room, basically, so that it can adjust to those global pressures without having a full-blown crisis. Is that right?
Exactly. Yeah, and I mean, there's no question that these global pressures are real.
Yeah.
Egypt's prime minister, Dr. Mustafa Medbouli, even acknowledged this. I think he said, "We agree that there will be no restriction on the movement of the dollar and that there will be a flexible exchange rate."
I mean, this is a big deal, right? This is a big event, this 50 to 1 ratio. I mean, what does this actually mean for, like, people on the ground in Egypt?
Well, for your average Egyptian, a weaker pound, it means that their money just doesn't buy as much, especially when it comes to imported goods.
Right, yeah.
So, I mean, imagine, you go to the store, suddenly everything costs a lot more.
Right.
Because the pound is worth less.
It's a completely, I mean, I bet that feels like a completely different world almost. But the prime minister, he seemed to imply that the U.S. election, which obviously strengthened the dollar globally, is part of the reason for all of this. And he also hinted at the fact that there might be more fluctuations in the future.
Yeah, no, he's absolutely right about how interconnected the global economy is. I mean, a strong dollar, like we're seeing now, creates these ripple effects everywhere.
Yeah.
And the pound, is definitely not the only one struggling. You look at the pound sterling, the euro.
Right.
Both also feeling the pressure.
Yeah, that mighty dollar. So then I guess the big question is, if you're planning on, say, going on a trip or doing international business or something like that, I mean, what does this mean for you?
Basically, if you are traveling to a country that has, a currency that's stronger than yours, well, your money just won't go as far. So, maybe that trip to Europe that you've been planning,
Right.
it might suddenly be a lot more expensive. And it's the same for businesses that rely on imports. Because a weaker currency means that those imports, they become a lot more expensive,
Yeah.
which can really squeeze their profit margins
Yeah.
and then potentially lead to, higher prices for consumers.
Yeah.
So it's a chain reaction.
It is. It's a chain reaction for sure. Okay,
Yeah.
well, let's take a closer look at what's going on with the dollar, specifically in Egypt. I mean, we're seeing, it's right around that 50-pound mark at most banks.
Yeah.
So it's pretty widespread.
Oh, yeah. I mean, take Abu Dhabi Islamic Bank,
Yeah.
for example.
Yeah.
They had the dollar trading at 49.96 Egyptian pounds for buying and 50.05 for selling.
And the Central Bank of Egypt had it at 49.77 for buying and 49.91 for selling.
Right.
And then the National Bank of Egypt and Banque Mer both had it at 49.91 for buying and 50.01 for selling.
It's interesting, like, how narrow that spread is between the buying and selling prices.
Yeah.
Usually the narrow spread means a stable and liquid market, but
Yeah.
in this case, it almost seems to reflect, like, this urgency, this almost a scramble to get dollars.
Oh, interesting.
While as the pound keeps dropping.
Yeah. That's a good point. You know what? Something else I noticed in these Arabic sources is that it it's not just about the dollar.
Yeah.
They also talk about how other currencies are doing against the Egyptian pound.
Oh, that's a good point.
So it gives us a sense of the pound's kind of overall strength, you know?
Definitely.
And the Kuwaiti dinar, for example, really stands out.
Yeah.
It's strong, like really strong compared to the others.
Yeah, the Kuwaiti dinar, that's a sign of a really strong economy there.
Yeah, wow. It's fascinating, you know, seeing all these global economic forces all kind of, you know, playing out like this.
Yeah.
But let's bring it back to Egypt for a second.
Okay.
What are the potential consequences here of this drop in the pound's value?
So a weaker pound, it can lead to a lot of challenges for Egypt's economy.
Yeah.
Probably one of the most immediate concerns is inflation. Basically, when a currency weakens, imported goods get more expensive,
Okay.
which, that leads to a rise in prices across the board.
Right.
And that can really hit everyday Egyptians hard. Their purchasing power erodes. It gets harder to afford basic necessities.
Yeah. So, like, worst case scenario here, what does that look like?
Well, worst case scenario, runaway inflation. And that could destabilize the entire economy.
Wow.
Yeah. People might start hoarding goods,
Oh, gosh.
leading to shortages. Businesses might struggle to cope with rising costs, maybe even leading to job losses.
Oh, wow.
And then, the government might have to resort to some pretty drastic measures
Yeah.
just to try and stabilize things, which, again, that could further impact people's lives.
Okay, so it's not all doom and gloom, though, right? I mean, there could be some opportunities here, too.
True. One potential upside to a weaker pound is that it can make Egyptian exports more competitive.
Oh.
Yeah, if Egyptian goods are suddenly cheaper for foreign buyers, because the pound has weakened, the demand for those goods could really increase.
Oh, I see.
So, this could actually boost Egypt's export industries.
Yeah.
And that might help to offset some of those negative economic impacts.
Okay, yeah. But couldn't that also lead to a sort of race to the bottom where, businesses have to lower their prices so much that it actually hurts them in the long run?
Yeah, no, that's a valid concern. It really is this delicate balancing act.
Yeah.
And, while a weaker currency can help make those exports more attractive,
Yeah.
it's also important to make sure that those businesses, that they're not cutting corners just to stay competitive. And the government might need to, come in with policies to support those export industries.
Right.
To make sure that, they're benefiting from the weaker pound, but without undercutting themselves.
Yeah, that makes sense. So it sounds like there are a lot of moving parts here.
Definitely.
It's not just the exchange rate,
Yeah.
right? It's about businesses, it's about consumers, it's about the government, it's about all of that kind of coming together.
Exactly.
And then, of course, the big question is, what about the IMF?
Yeah.
How are they going to react to all of this?
That's the million-dollar question right now.
Yeah.
They've invested heavily in Egypt's economic stability, so I'm sure they're watching all of this very carefully. So it all comes down to how much leverage they have,
Yeah.
to influence those economic policies.
Yeah, it almost feels like they're playing a game of poker, you know?
Oh, definitely.
Egypt's trying to figure out, what's their best hand. But the IMF has some pretty powerful cards.
Yeah, that's a great way to put it. That $8 billion loan package,
Yeah.
it comes with the conditions often focused on, economic reforms, being fiscally responsible. And,
Right.
I mean, now with the pound at this record low, the IMF, they might even push for stricter measures just to, ensure that things are stable.
So, like, what kind of measures are we talking about here?
Well, they could, for example, demand cuts in government spending.
Oh, okay.
They could push for further privatization of, those state-owned enterprises,
Right.
or even, maybe even a restructuring of Egypt's debt.
Oh, wow.
I mean, these measures, they're often not popular, but the IMF, they'll argue that they're necessary
Yeah.
to get Egypt on this path to more sustainable growth.
Yeah, so the government has a tough choice then, trying to keep the IMF happy, but also taking care of, the people who are struggling.
It is. It's a tough balancing act for sure.
Yeah, it is. So, I mean, what do you think? What's the government's next move?
That's a tough one.
Yeah.
They might try to intervene in the currency market, try to, prop up the pound.
Mm-hmm.
But doing that can deplete those foreign currency reserves.
Right, yeah.
They might try to, control inflation with things like price controls or interest rate hikes.
Mm-hmm.
But again, those, they have their own consequences.
Right.
So, yeah, it's a complex situation No easy answers.
No, and that's what makes this, so fascinating, right?
Yeah.
We've talked about the causes, we've
Mhm.
talked about the potential consequences,
Yeah.
but, the story isn't over yet.
No, not at all.
What happens next in Egypt? I mean, it could impact the entire world.
Oh, absolutely. This
Yeah.
isn't just about Egypt.
Yeah.
This is a global story because the global economy is so interconnected.
Right.
And, a crisis in one country
Yeah.
can quickly spread to others.
Yeah. I mean, especially with the dollar being so strong, right?
Yeah. And, the actions of the U.S. Federal Reserve,
Uh-huh.
the strength of the U.S. economy, all of that, it impacts currencies everywhere.
Yeah. Okay, so, well, we've covered a lot of ground today.
Yeah.
We talked about, this historic drop in the Egyptian pound,
Mhm.
the role of the IMF, the potential economic fallout,
Yeah.
and, how all these global forces are at play.
It's a lot.
It is a lot, yeah. And like you said earlier, the story isn't over.
No, not at all.
So what do you think? Any final thoughts for our listeners?
Well, I would just encourage everyone, stay informed, keep following the developments closely
Yeah.
because things are changing fast. And the decisions that, they get made by the Egyptian government, by the IMF, even by players like the U.S. Federal Reserve, I mean, they're going to have huge impacts.
Yeah, absolutely. It's a good reminder, too, that, even in this world where there's so much news,
Right.
it's really important to really dig into these complex issues.
Oh, yeah.
To kind of connect the dots and really understand what's going on.
Absolutely. Helps us make sense of the world,
Yeah, it does. Well, awesome. Well, maybe we'll have to revisit this in the future,
Yeah, we'll see what happens.
see how the story unfolds.
Definitely.
All right. Well, until then, stay curious and keep exploring.